So let's talk about the big question on everyone's mind. Is the AI boom just the next dot-com bubble, all hype and no substance, destined to crash and burn? You hear the warnings everywhere, right? The IMF, Goldman Sachs, they all see scary parallels to the 90s. But what if they're missing the real story? In this explainer, we're going to dig into the data and show you why this isn't just another bubble. It's a revolution, and it's built on something surprisingly solid.
And look, you can't blame people for being worried. When a financial titan like Ray Dalio says, "Hey, this looks really familiar," you listen. I mean, the guy has seen it all. It's a powerful argument, because on the surface, the hype, the massive investments, it all feels a bit like we've seen this movie before.
And it's not just a gut feeling from a few big names. We're talking about a majority of professional fund managers, the folks whose entire job is to manage billions of dollars. Over half of them are looking at AI stocks and saying, yeah, that's a bubble. So the skepticism, it's real, it's widespread, and it's coming from some of the smartest people on Wall Street. But here's the thing. Are they right? Or is everyone so focused on the soaring stock prices that they're completely missing the tectonic shift that's happening underneath it all? That's the question we're really going to tackle today. So, let's start with the most important piece of the puzzle. I like to call it, show me the money. Because at the end of the day, the single biggest difference between this AI boom and pretty much every speculative bubble in history comes down to one simple thing: cold, hard cash. This isn't a story about future promises, it's a story about jaw-dropping, real-world revenue happening right now.
Let's just start with this number, $13 billion. That is OpenAI's annualized revenue. To put that into perspective, they were at just $6 billion only 6 months before that. This isn't some startup hoping to figure out a business model someday. It's a revenue-generating machine on a scale that we've almost never seen before this fast.
But it's not just how big the revenue is. It's the absolutely blistering speed of the growth. I mean, look at these numbers. OpenAI growing at 243% year over year. Anthropic's revenue run rate exploding by over 400%. These aren't just good growth numbers. They are off the charts, something is fundamentally changing in the world kind of numbers.
And this boom isn't just built on sales, it's built on insane profitability. Let's talk about Nvidia, the company building the literal backbone of this revolution. They're operating with a 53% net profit margin. That is staggering. They aren't just selling chips, they are practically printing money. This is the engine that's funding the entire ecosystem, and it is a wildly profitable one.
So when you put all that together, the revenue, the growth, the profits, it becomes crystal clear. This is not your father's bubble. So let's break down 3 key fundamental differences that separate the AI boom from the dot-com bust of the late 90s.
Okay, difference number 1, and it's the most obvious: real money. Remember the dot-com era? Companies were valued on things like eyeballs and page views, metrics that had absolutely no connection to actual cash. Pets.com, anyone? Today, the leaders in AI are generating billions in actual revenue with a very clear path to profitability.
Second, and this is huge, think about where the money is coming from. The dot-com boom was fueled by risky, speculative venture capital and IPOs for companies that were drowning in debt. This AI boom, it's being funded by the massive cash piles of the most profitable companies on Earth: Apple, Microsoft, Google. We're talking over $300 billion being spent not on a prayer, but as a core strategic investment paid for by their profits.
And the third critical difference is who is actually paying for all this. Dot-com companies were chasing fickle consumers, trying to get as many users as possible. The AI boom is being built on the back of long-term, multi-year contracts with the world's biggest corporations. Microsoft CFO basically said their spending is directly tied to business that is already contracted and on the books. This isn't speculative hope, it's locked-in demand.
You know, the chief economist at Alliance really hit the nail on the head with this one. He said a better way to think about it is a boom underpinned by fundamentals. Even with these high stock prices, the core financial metrics are nowhere near the completely insane levels we saw back at the peak of the dot-com bubble.
Which brings us to what I think is the most compelling argument of all, the real revolution. Because the best evidence that this isn't a bubble isn't buried in some financial report. You can see it in the real world, in the tangible impact this technology is having on how we actually work and live, right now.
Just look at these examples. Programmers using tools like GitHub Copilot are finishing their tasks 55% faster. Think about that. In finance, a credit evaluation that used to take 5 days now takes less than an hour. And in just one hospital system, AI saved 50,000 hours of clinicians' time. This isn't some far-off promise. It's a massive productivity boom that's already underway.
And the impact gets even more profound. Take medicine. Traditionally, only about 40% of new drugs make it through phase 1 trials. It's a huge hurdle. But for drugs developed using AI, that success rate doubles to nearly 90%. This isn't just an improvement, it's a fundamental breakthrough. The science behind it is so important it just helped win a Nobel Prize. This is technology that will literally save lives.
So let's be really clear about something. Does any of this mean that every AI stock is a bargain and will only go up? Of course not. Some companies are absolutely overvalued, and there will definitely be market corrections along the way. But here's the crucial point to understand. A market correction is not the same thing as a technology collapse. The two are not the same.
In fact, the dot-com crash itself gives us the perfect lesson. The bubble burst, yeah? Hundreds of companies went to zero. But the internet didn't die, did it? The survivors, companies like Amazon and Google, went on to define the next 20 years. All that infrastructure that was built during the hype, it paved the way for the next wave of innovation, like the cloud and social media. A crash just clears out the noise so the real winners can emerge.
So when you strip away all the hype, all the fear, and all the day-to-day noise of the stock market, you're left with 3 simple truths. The technology is real, the revenue is real, and the productivity is real.
So maybe, just maybe, we've all been asking the wrong question. Maybe the question we should be asking isn't, is this a bubble, but rather, who is going to be the Amazon and the Google of this generation? Because this revolution is happening with or without a market correction, and the companies that come out on top won't just be valuable, they're going to shape our future.